Can you guys not hear the audio? Hey guys, can y'all hear the audio out there? Audio check. Oh, hold on. This is a total disaster, so I'm gonna pause the music here. Alright, I tried to go live a minute ago and I literally killed my computer. I think I had a video card that just ate it just now. So I literally had to like move cables around and move monitors around. So we're gonna do this without my camera on too. Let's get rid of this browser source thing. Sorry everybody, this is like just gone crazy. My computer just died. I started recording and the screens went black, everything died, and when it came back up, one of my video cards that one of my monitors is plugged into isn't showing up in the drivers, isn't showing up anywhere, and somehow it's displaying video, but I had to move my thing to the other side. Can y'all see the comments that I pulled up here? I don't even know what's going on right now. This is crazy. Between the markets, I don't know. The market, okay, yeah, Bitcoin's still selling off a little bit. I can't even tell. My computer's gone crazy. Anthony says he blames Peter's shift. Can you guys see the comments on the screen on the video feed too? And why did TradingView change this to like light? I want it to be dark. I've always set it to dark, and it's all like light all around here. I don't know what the heck. I gotta fix that. No, it's not here. It's another setting somewhere else. Whatever. We'll just deal with it. So yeah, currently it looks to me like Bitcoin is trying to come into support right now. And this might be our last opportunity to bounce here for a little bit. Yeah, I don't know where that stupid setting is, but whatever. Let's see here. Yes, visual, audio is clear. Got a bunch of comments here. TradingView changes dark theme to white every time. Yeah, it's always dark on the outside for me until like all of a sudden I just logged in and it's all light, whatever. We'll deal with it for today. Got our Doge-wave here. Let me make the chart itself bigger then and get rid of all this white stuff on the screen. Let's just take a look at Bitcoin here. I do need the sidebar up though, because I do need to get to the other charts. I didn't mean to close it entirely. Alright, yeah, that should be better for you guys, I hope. Okay, this is an unmitigated disaster with my computer like just completely dying on me as we go live. You'll see, y'all want to see the time frames and stuff I'm on, so there, I'll move it back over. Let's talk, Mr. Right click, then background templates. This is for the main chart background, but I want the frame to be dark. Yeah, it's like laggy as all get out. Alright, forget about all that. Let's just move on here. Get rid of the comment. How's everybody doing? Alright, so here's the deal. Here's my opinion. Obviously I had this trend line and the 120-day SMA. We've got a little bit of gap here. I'm going to have a decision to make if we get under here for any length of time. Given that it's the weekend, I'm not going to overreact to whatever happens over this weekend. Top left button. Change to dark. There we go. Alright, there it is. And I'm sorry if everything's laggy. It probably is laggy as I'll get out. So my screens are laggy for me. I have a dead video card that's somehow half operating right now. I don't know how it's working, but it doesn't really matter. I'll go figure it out later. One of my 5700s in here is just cratering. All right. Boom. There we go. We got it dark. All right. So, yeah, markets look pretty rough. Bitcoin looks pretty rough. I am contemplating adding a little risk on here on another touch of the 120 for a bounce myself. I think that we're going to have a pretty wicked sell-off into equities close. Apparently the equities want to roll over and get that 10%. Let me show you what a 10% on the equities would look like, which would, be a corresponding sell-off probably in Bitcoin. Something fairly close. And again, sorry for the lag. It's like laggy as I'll get out for me right now. So 10% takes us right down to the 4,200 level, which was a May kind of swing high, hit resistance here in June over summertime, and then got back above it and tested that level in July. And then we didn't quite test it here. So that would give us a broadening range. You know, we'd make a lower low here. But you see, when these big sell-offs now, this is a much bigger than 10% sell-off. Normally when you get these sell-offs, you get a bounce and then a continuation down, right? So what we're going to be looking for is, let's throw some fib levels on here. Why does Doge-wave go silent like that? All right. So what we're looking for here is, oh my goodness gracious, this is laggy as all get out. We get some shutdown news over the weekend from normal sources. This is a good time to sit on your hands and not do a whole lot, right? So on equities, if you're watching equities, we can get rid of the 120. I don't really watch the 120 on equities so much. It's the 50, 100, and 200 is what I look at on equities more so. The 120 is a crypto thing. I think until 120 works because crypto trades 24/7, but that's just my opinion. All right. Okay. Yeah. So what we're looking for is we've had a couple of kind of intraday bounces or single day bounces, but we're getting this overall sell off. I think a 10% is pretty warranted. It would get us below this trend line. If you draw, this upper trend line here is kind of your guiding trend line. You clone that all the way down. It would get us below that, which would be a really good bear trap fake out probably. There's just too much money sloshing around still that a sell-off probably can't be sustained just because there's so much money that has to go somewhere, and there's only so much you can take out of equities because there's only so many safe havens outside of equities unless crypto becomes that safe haven or something. I don't know. Gold's been pretty depressed for a while. I'm imagining they're not getting a bid. If gold's not getting a bid, DXY is not getting a bid. Yeah, this is just. Like, if the DXY was popping here, I'd be a lot more concerned. But the DXY is pretty subdued. It's just an excuse to sell off, taper, tantrum. 10% feels about right to me. So let's look here. I think this is a 10% over here. This is the last 10% we had. This was right at 10% right there. You see, it got pretty close to 10%. I got to 10%. Look at that. So 10% bounced, and then we had like a double bottom put in. So, yeah, this sort of thing right here might be the formula of a nice little corrective period. How long did that last? Something that looks similar to this from September of 2020 to the late October. So basically 2 months. 2 months of sideways, double bottom, then maybe a resumption. But yeah, it's going to be hard for Bitcoin to put in a parabolic top in these sort of conditions, right? Unless money just really flows from equities into crypto, I suppose. But I would imagine the path in general that I can see. This is what I'm looking for right here, right? We're going to get this big sustained sell-off we've had. We're going to get a better bounce than we've had so far, most likely, especially off of these levels. You have the 120, the trend line, and you've got the swing high over here, right? And this is, the weekly close was right up close to there, but just call it the swing high, which is that red box that I've got at the bottom of the red box here. Let's just get rid of that red box. I don't even know if this is a Bybit feed. Okay, so, this swing high is going to provide a lot of support. This is kind of the key indicator. If you get below the swing high, which is interesting that the swing high is right at the 120 level, right? 120 day. It's going to provide some support. I mean, it came close to it, and it provided some support, but it didn't actually touch it. So now we're likely going to touch it or double bottom here. But it should provide some support. And it should take some time for us to then work back through it to lose it and confirm it as resistance. So we've got some time ahead. An example of this would be like, I want to see this level here that we put in, this low over here. Yeah, this swing high is pretty far removed. But you just get the idea that when you have, I don't know. It didn't have to look like that, right? It can look more like this over here, but I was trying to find a good ancillary. I don't like using this price action right through here. I mean, you can compare this, and then let's throw the 50 on here. And the problem I have in comparing this is the price action that led up to this is a lot different than the price action that led up to our current price. So that's the one reason I believe that a bounce could be. There could be less of a bounce, and there could also be less of a sell-off. So But as of right now, in my opinion, all Bitcoin is doing is coming into support. So, not really a time to overreact. It's a time to kind of sit on our hands and just keep an eye on what's going on here. That's just my opinion. This is where I would draw the bottom of this. Everybody's looking at the descending wedge here. The reason I would draw it right more or less through here is I'm looking at the daily closes, right? This daily close here and this daily close here, and then just extend that out. So when you start to get in these type of patterns, I really move to a daily close level to watch, because there's a lot of price action that wasn't around the close that can be noisy. So I start drawing these trend lines right around the daily close. And again, the reason for that is just try to reduce noise. The daily close is when both sides are angling for whatever position direction they're trying to move an instrument. And so the close on the daily happens at the same time every day. You see a little bit of volume tick up there, and that's typically more reflective of the fair price that the market sees than the wicks are, right? So the wicks are maybe momentary overreactions to things, but the daily close is usually pretty close to what the market for that day, digesting the news it had for that day, kind of values that thing at. So I start anchoring these type of patterns on the daily closes once we have enough of them to do this anchoring with. This is how I would have this descending wedge anchored, and I'd be looking for, I'd have to do some work on it to get it a little bit more dialed in here, but you get the idea. So the bottom of it hasn't been taken out. I know there are people that probably have different wedges or trend lines that cut through here that discount this level over here, but I wouldn't do that myself. That show that it's probably breaking down again, but I wouldn't discount this area over here. All right, let's look at comments. Boom. If we get some shutdown news of the weekend, I haven't had any new comments here in a little bit. Am I still live? Is everybody still out there? Visuals and audio are clear. I think people are just like listening. Okay, well, either that or my stream has stopped, like giving me updates on viewers and things. Is the stream still live? Oh yeah, Lemmy says there. Okay, we got a Lemmy here. Give me a Lemmy check. There we go. Okay, it's my application here. Where'd my Lemmy check go? I got other people. I can't pull up my Lemmy. I'm trying to pull Lemmy up here. Where's he at? Let's go, app. We're listening. We're listening. All right. I don't know. Anyway, point is I wouldn't overreact right now. I'm gonna be sitting on my hands for this weekend. Sunday night, I'll try to go live Sunday night. I think Sunday night's gonna be really, really, really important to see how the markets react come Sunday night. See what kind of news comes out over the weekend, how the markets digest that. Let's take a look at the equities market again here. Yeah, I mean, another thing too is consider is we're still coming to this midpoint trend line. So there's a world where we just hold here. I would imagine that you get a bounce off of this midpoint kind of trend line, and then if we're going to get that rest of that 10%, it's going to be off of a little bit of a bounce. But let's see what the close looks like today. We got an hour until close. We can probably keep going live until pretty close to the close. I'm going to move this down, move this out a little ways, so we just keep an eye on where that 10% would take us, so we can see price action a little more clearly. Drop the 50 and the 120. But yeah, I mean, we've got this midline. And then you've got support all through here. Let's see if I can get a weekly level here. What a disaster with this computer. I hate you right now. What are you doing? All right. What the heck? Lemmy, you're like blocked from my chat thing apparently. I was trying to find like Lemmy Koopa. Omar, go away. Brandon, I follow millions via Twitter, YouTube. You're the one. Full support, man. Oh, well, thank you. I appreciate that. That's really nice. We are a community, so I'm one of you guys. All right. 141 beta. Why is this not? Yeah, I'll show you the. Here's my little app that I just found over the weekend that I'm using, and I just don't, not all the comments are coming in. I'm using Ziploc Homes. I got that one. Can you put comments in the bottom right? Yeah, I can do that, I think. Let me see if I can figure that out. How's that? Ziploc Homes. Is that better? Can y'all see that better? See the screen better now? Phew, it's not me. But yeah, there's no Unless it's a different name. So he came in after Omar. Yeah, not all the comments are coming in. My application's like big W's in the chat. All right, bro, put out the comment. All right. Anyway, moving on. I want to look at some other things here. Let's go look at some just broad market indicators. Oh my goodness gracious! My computer is dead. It's officially dead. I seriously, I think I'm gonna have to retire this computer now. That's how bad it is. All right. What is going on? All right, I was gonna pull up. So coins on exchange, off exchange. Let me pull that up. Sorry, this is an emergency session, so I didn't have stuff like pre-prepared. So you just have to deal with it. Deal with it, people. All right, here we go. So let's go to this Glassnode dashboard here. Everybody's yelled at me. You see this coins come off exchange last 24. Let's just go to the last month. You see that pretty strong coins coming off of exchange there. The last 24 hours, a lot of coins have been coming off exchange. So that continues to be positive, net positive. Yeah, my computer is not even recognizing this video card. Whatever. Okay. And then let me zoom in on here. Let's go to the 1 month on both of these charts. You can kind of see it side by side. So we had this. This was concerning, right? We were talking about this as price was slowly rising, coins coming onto exchange, but then they've come back off here pretty abruptly. Let's go back a few months. Let's go take a look at, our early indicators from the sell-off earlier this year. This is kind of small, but you can kind of see here. Where is our sell-off event? July. Oh, this is only, wow, it's been longer than 6 months, huh? All right. So yeah, this is what we're looking for right here. It's this lower high that we put in May. Coins were coming onto exchange the whole time we made this lower high, and they precipitously came onto exchange. So the whole time, all these new highs we were making, coins kept coming off of exchange, and then finally we had this lower high where coins came onto exchange. So this was starting to look concerning because we had a little bit of a lower high starting to form, coins come on exchange, but that trend has reversed. It never really reversed this sharply. It did kind of like right here. You see a similar, little pop in coins on exchange, but I mean, it happens all the time. You get a brief period of some coins come on exchange and they continue to draw down. So it appears that we're more like doing this little bit right here, as far as a corollary goes. But you can see way back over here, we had this coins come on to exchange over here, and then it didn't really. It was right through here. Really, when you look at it on the little, red-green chart here, it doesn't look that striking. You can see it a lot more clearly here, coins coming onto exchange, but it doesn't look like it's that much on this chart. This particular day right here is a bunch, but it doesn't show up like that over here. That's interesting. It's probably not lined up by date exactly. It's July 17th. Let's go find July 17th. Oh, this is a year. That's why. That's why I'm like, this doesn't make any sense. 1 year out. There we go. That makes a lot more sense. I'm like, what is going on here? All right, yeah. So you see coins come out. So you see how precipitously, like how much they came on exchange here. A bunch of big green days. A bunch of coins come on to exchange. And some all through here. Trying to line all that up. But this big drawdown here kind of nullifies this little increase that we had. So we're back to kind of neutral. Anyway, the point is we're back to neutral and all that. I would imagine there's going to be some coins that came onto exchange today during all this sell-off. So it's going to give us to see what that looks like. Let's see what that looks like here. But the long and the short of it, I mean, there could be definitely worse things than coming back into support over here one more time. And yeah, this is the 4-hour chart. So again, I anchored it on the hourly closes. You can see on the 4-hour chart, we've had several wicks above. Another little thing here, because the dailies are so well rooted. Now we can go. It looks like there's a little bit of confluence at these breakout levels here. You have a little secondary trend line. So if you're trading on a really short time frame, you can kind of wait for a break of the second outer trend line as opposed to just taking an entry on the first one. But if you're looking at a longer trend line, obviously just that one trend line is probably sufficient. But it also catches the outer wicks there. So this has been a common thing that I've seen, is you get this little bit of a double, and you get this will help prevent you from taking a false entry potentially if you just wait for this outer one to really break. and confirm. 53.5. Well, guys, $55,000 Bitcoin is $1,500 off today. What is this? This is not like a Cyber Thursday, is there? Cyber Friday. What is this, like 1st December Friday sales? All right. Nice. We got lots and lots of comments. Just read, let's see, this Anthony says, just read that, this is awesome, I can put comments on the screen here, at least this is nice. Just read that short BTC futures are up 3x, report issued by CFTC this past Monday, heading into this week. Possible front running this dump, CME futures, open interest. Yeah, okay, so short futures are up, which, if short futures are up, but we don't see the same spot selling, then we'll watch. What we'll monitor for is to see if the short futures market's getting overheated when there's not a supporting spot selling going on. I'll have to look at some volume charts here to kind of line all that up. But the same thing happened. Like all these breakouts, this little event right here in September, if y'all remember, the futures funding rate was very extended to the long side, as well as hold on, where's my little drawing tool that I'm looking for? Over here. So futures funding was very extended to the long side, and so there wasn't at this point the spot drawing had kind of slowly dried up, and so this was just a really good setup, not a good setup, but a setup to wipe out a bunch of longs going leverage long here, right? So this is what happens when you have not enough spot buying to support the leverage that's coming in. So there's a lot of leverage coming in anticipation of a big, end of the year run, and then it got hammered all through here. Same thing here. We had some leverage build up here and over here. It wasn't nearly as severe, but nonetheless there was leverage build up. If we get the same in reverse, right, we get leverage built up to the downside with shorts piling in, thinking the market's over and the bull run is over and we're heading into the bear market, but there's not the same equivalent spot selling, and we're below the 120 now, it looks like. There's not the same equivalent spot selling, then you'll have a potential situation where you liquidate all the shorts, right? So let's see here. Oh man, we're snapping through some support now. We got some liquidations. I don't know if that liquidations or stop losses are just getting taken out like crazy right now. Probably everybody and their mother had the same stop losses. We were looking at the 53K one. 51, 52. Oh yeah. Bloodbath time. Well, this is going to invalidate a lot of things, but this needs to turn into a wick really fast or it's going to be a fun bear market. That is fascinating. Let's see here. Now my computer being like, it's drawing super slow on my computer. Let's go to the 1 hour here. I just cascaded down. What's the broad markets doing? Let's go look at the SPX. Did we get a cast? No, it's just crypto. Let's look at our other crypto assets. I didn't get stopped out yet. I should probably move my stop up, but whatever. Okay. E-gold. Got a lot of stuff selling off here. Pretty healthy sell-offs across the board. Let's look at Bitcoin dominance. Is Bitcoin dominance bouncing? This is so odd if Bitcoin dominance isn't bouncing on a big sell-off like this. Let's turn this comment off. Yeah, I gotta get used to working with these comments. I'm sorry. Yeah, so Bitcoin dominance isn't really bouncing either, which is really strange. Normally in a real sell-off, right, when it's a real bear market sell-off, Bitcoin dominance is gonna move upward, right, as people flee into the bigger large cap coins, namely Bitcoin. How's Ethereum doing? Let's go look at ETH if I can find it on my chart here fast enough. There's ETH, Bitcoin. Let's come back into, so we were all talking about this. I had Alan on the other day, right? We're talking about this. And by the way, Alan and I went live yesterday, so it's totally our fault. We're selling off here now. But you see the top of this breakout trend. I was saying I was waiting for it to pull back into here and see if we got resumption to rotate a bunch of my funds from Bitcoin to Litecoin. Bitcoin to Ethereum potentially. Let's look at the ETH chart, USD chart. I'm sorry. How far is ETH off? It doesn't look like it's off as much as Bitcoin is, possibly. That's good. It's actually good news. Is it 15% off from that low? That's a bigger sell-off than I'm thinking. Yeah, from the all-time high, we're currently down on ETH. We're currently down 17%, but we already put in a lower low over here. Bitcoin made a new low, it looks like, but Ethereum did not. So Ethereum held, what was this? Back on the 26th, Ethereum held 3,900, and then we made a higher low on Ethereum. Let's go take a look at Bitcoin. Bitcoin made a lower low, hit my 51.8 level exactly. That was the weekly support I've been watching, right? And I've been saying that I thought we could come back to 51.8 for a long time now. That's my level I've been watching. And that would be great if we got a quick bounce off of here and doesn't force me to make a decision on the 120. So the 120, I'll only sell my tradable spot. I'll only basically stablecoin up. What I do is when we lose the 120 day, I flip my exchange funds, my base account from Bitcoin to stablecoins. Basically, is how I do it, right? And the only way I'll sell my like longer term spot hodl bags is if we get some clear blow off top or we're really overextended. It doesn't feel overextended to me right now. We've been consolidating. I mean, we were higher than this in February, right? So it doesn't feel overextended at this point to me. The sell-off maybe feels a little bit overextended. But the good news is if we get a nice bounce off of this level, and I don't have a couple of days where I'm hanging out below the 120, I don't have any decisions to make because I don't sell my spot when it drops below, right? That's not how that works for me. I need to confirm the 120 as resistance, right? So just dropping below it is not a big deal. Like over here, none of these are really big deals. These are just like temporary blow up, bounce right back above it. It's this activity right here that got me to sell spot before my tradables, at least my tradable account. This is on the 12 hours, flip to the daily so I can kind of show this. Just for everybody who's new here, right? So this is when you'll see me selling, is when we have a couple of days close below. We can't get above it, and we kind of confirm it and roll over and confirm it as resistance. And so after a couple of days, I'll sell the next pop up into it, right? I'll start to trim, and I'll start to sell. And this is where I would sell my spot, or I would start to convert my spot Bitcoin into USDC stablecoin on exchanges, right? If we were to do this, so that'll take several days for that to play out for me, right? I know intuitively, just having been around the markets long enough, I know that if we were to slice through, even if we got way down to like 43 or something, right? It's going to bounce back and test this area of resistance, right? And then bounce, and so that this confirmation somewhere right in here is where I would start to trim and flip over to stablecoin. I'm less inclined to flip to stablecoin aggressively currently than I was back over here, because back over here we had this monster move from 10,000 all the way up to $60-something thousand, and then we were coming off. This time we've had a move basically from a new base of support we put in right around $30,000 up to again 60, 69 or so. So just in the relationship, the ratio here, I just don't see the same downside. I see a much more muted downside and an accumulation that's probably brings us to maybe the low 40s for like a spring level. You can kind of see this price action over here, right? And we've been talking about the manipulation in the market for a long time. Like, it's obviously manipulated if you don't see it. If you think I'm a conspiracy theorist, that's fine. But it's clearly manipulated. All right, so you see this support level, these lows over here. So this is the yearly open actually gave us our support. So the price at Bitcoin open January 1st was actually ultimately our really good support level that we put in over here, right? So if I go find the yearly open, where's January 1st? Yeah, January 1st opened right there, right? And both those touches came right into it. All right, we'll do that green line. So that's it's a good level. So now we've got this new level that we've started off with here, and this low over here, I would imagine, would be our spring low level if we have a longer accumulation event somewhere in this area. Maybe I'll have to do some work on this. This is not something I've thought about. I'm just doing it live right now. But you get the concept here that. The way I view this market is our downside is probably like we had the ultimate downside was the January open right at 30,000. I think the downside if we do lose this level is like $40,000. So there's some calculation that has to be made. On my part, I'll have to do some deciding on if I flip exchanges to stable coins, I'm going to have tax implications potentially on some of those accounts. So it's just a risk reward thing. Do I want to pay the tax for the likelihood that we come back down to $40,000? Now, the truth is we could go lower, right? So I will inevitably sell some just to protect myself in case in the event that we go lower, but I'm going to have some decisions to make myself here on these levels. But I'll probably stablecoin up, keep my hodl bags is most likely what I'll end up doing, and I'll just take the tax hit because that's just, to me, that's a prudent thing to do. Should we confirm to the downside here? But as of right now, in my opinion, again, we're coming into this trend line. We've got trend line support, weekly support at 51.8, and then the 120 days right around here as well. So we'll see what that does for us. Let's see here. Did I miss anything on Litecoin? So Litecoin was my hedge. So Litecoin, I took a trade in Litecoin. I'm in a trade currently on Litecoin, which I'm currently losing pretty badly. I put the stop too wide. I'll just tell you that right now. I put the stop down here below this wick because I wanted to manage it manually. So if we get down to 170 or 169.50 or something like that as my stop, I'll be stopped out. But for me, Litecoin was a hedge. And obviously, this big move that we had over here could have been the only move we're going to get. Right, and so we could just be headed down like this over here on this other move that we had earlier this year to $400. My thesis was, if I go drop the Litecoin Bitcoin chart, a Litecoin USD chart on top of this, you'll see that the idea here clearly is that Litecoin lags Bitcoin. So if Bitcoin were to, if we were putting in like a pattern like this over here, you see. And if we were to really take off, Litecoin would simply just lag Bitcoin. It might slightly underperform, but for the most part, it's gonna. You see from the launch point over here, there were times Litecoin lagged, but then when Bitcoin starts to lose its momentum, you get that last rotation into altcoins, namely Litecoin. So Litecoin is my hedge that maybe we're rolling over here on Bitcoin, and we're heading for an accumulation event, and this is a good risk reward to me if the technical setups are there also. So this is what I was trying to play. So I did play that here. We got a really good trade here, and then I've been re-entering down over here, but we're coming down, obviously pretty precipitously over here currently. But that's what I'm looking for. Is you see that smaller pop, and if Bitcoin is going to roll over, one of my key flat indicators. This is kind of just a general warning flag. Just put a little flag on here, right? So this was a red flag here, right? That bad things were about to happen. I traded this Litecoin last time. I wasn't as aggressive, but I still made some good trades on Litecoin through here. But this was a huge red flag to me too, and Litecoin made this big move. I forget what the price was of Litecoin over here. It's like $500, right? Something like that. And Bitcoin was putting in a lower high, and Litecoin was really breaking out big time. That was a big red flag, right? And so same thing's going to be true over here. What's interesting is we got this little pop here, but so far we haven't got that big Litecoin move. And so what I'm seeing is shades of this activity over here right now, right? So you get a little bit of a what's the word I'm looking for? Not compulsion. What's it when people give up? What's it called? Capitulation. Thank you. Capitulation low here, and then a strong bounce. So Bitcoin is doing something similar that it did over here, but it spent a lot less time in that little consolidation fake bounce before it went back down. So very different overall. It's a very nuanced differences here. Spending a lot more time here. Another thing to consider, just when you study these patterns, when you have a big rolling top and it's a distribution event, what happens is price spends a lot more time spiking and spends a lot less time in the bottom of the range. So if I were to draw a range through here, you're going to see that the percentage of time that it spent at the top of the range is higher than at the bottom of the range. I'm just going to draw this through here, and you can just be able to see what I'm talking about. See how much price action there was at the top of this whole range, and how little price action there was at the bottom of this whole range. Now I'm going to draw another little box down here at the accumulation, and you can kind of see the same exact thing but in inverse. You see how much time. Let's draw this as red so you can kind of see that we can make up the difference between a distribution event and an accumulation event, right? Distribution event, a lot of price action in the top half of the range. Accumulation, a lot of price action in the bottom half of the range. So if this is indeed a more full-fledged reaccumulation event, what we would expect to see is a lot of price action in the bottom of the range. So let's draw a box over here and just see visually how that looks. So here's our range. And you can see that so far it looks a lot more to the downside than the upside. you know, we've kind of fill out the range here, but the range is the swing high right here, right? So we just wick down below it. But look, if you look at all the time that we're spending here on the bottom of the range as opposed to the top of the range, we'll see as the pattern continues to play out. It looks like it's not done to me either. But you see here, you get these, this false bounce, a sell-off, a false bounce, and then you get some extended time at the bottom of this range. So if this is reaccumulation, what we're headed for is some time down here toward the bottom of this range, which is just going to cause people a lot of fear and anxiety and everything else. So we, in theory, we might get another pop and then a bunch of time down here and then a recovery. And that, you know, that could take us all the way out to early next year, right? Which would really confuse a lot of people who are looking for a blow off top at the end of this year, right? But these patterns tend to be pretty true. Now this one, I guess, really when you consider the September move, though, it was a sharp move up, sharp move down, and a pretty big bounce. So this isn't a full reaccumulation, though. From what I've been told, this is they call a backup pattern. So basically, this is your accumulation. This is that last LPS. Well, I forget what they call it exactly. And then this is just a reaccumulation backup. This is just a backup. This is an extension of this whole accumulation phase over here. But this over here, if this is full-fledged reaccumulation, we're going to spend some time to the bottom of this box I just drew, most likely. If I can get the computer to draw the box without crashing on me. It feels like every second, it feels like my computer's about to just die on me. Like it's about to just explode. So laggy. All right. Hey, I got a Lemmy Koopa comment. Brandy, my buddy. Check out AMC for fun. So I hope this is beneficial. Anybody have any questions or any thoughts here? I got a taco. I can't look this app that I have. J Carey. All you guys see I see the little, but it shows up as the word. All right. Apes pile of poo pantser today. My computer is dying. Apes. Where's that actual comment on the screen here? I gotta see this. Apes pile of poo. R. Ross. Did you delete your comment, Ross? It came in on my little chat thing, but I don't see it on the YouTube channel chat, but I see it on. That's funny. Apes pile of poo their pants today. That's cracking me up. Let's get Brandon raising hands. This is great. Okay. It's cracking me up. Anybody got any questions? Somebody said look at AMC for fun. Let me get rid of all this noise that's on this chart right now. Oh my goodness, that's too funny. It's Mac. I don't know what Mac is. Is Mac a good investment, guys? I can't type over my. You should see how I have my anyway. It's a big disaster. All right, AMC. Yeah. So the how bad is it actually off? Why is this in percentages? No, bad percentages. I mean, is anybody surprised? I'm not surprised. Just kind of broad capitulation here and a lot of these retail plays. Retail is just getting demolished today. The big boys are letting them have it. Of course, you know hedge funds and everything are what's causing the sell-off today. Taper tantrum day. Is CRO on your radar at all? I'm not a big fan of centralized exchange tokens. It's just not what I'm really focused on. So, whose stop loss was 0? I got a super chat thing. Can I look at Epik real fast? Sure. EPIK. What is Epik, guys? What is Epik? Epik Prime USDT. Oh, it's a big candle. Did it just get listed on KuCoin? It just got listed on KuCoin, clearly. Let's look at another non-KuCoin. Has it been on Huobi a while? Or is it okay, good. There we go. So it just got listed on KuCoin. Good for them, whoever this is. I think I know who this is, actually, now that I think about it. Hold on. Is this who I think it is? It's not coming to me right now, but I'm pretty sure I've heard of Epik. Let me pull up CoinMarketCap real fast. Let's take a quick look at it. And yes, I know people use CoinGecko. It's probably better, but the notes on CoinMarketCap are a little bit more complete sometimes. All right. Okay, video game. Yeah, so it's the video game play. Leading global NFT license company. Yeah, okay. Epik Prime. Let's look at their website. Sure, why not? All right, Decentralized Miami 2021, largest conference. So they got a conference coming up, huh? About Epik. Decentralized. Oh, they're going to be at the decentralized thing in Miami. Wasn't that the conference we already had? Anywho. Let's get rid of your comment now off the screen here. Digital items. Okay, so it's like an NFT play. Digital items, licensing. Okay, and then let's look at your chart. Let's look at our horizontals first. So the most important thing in the markets is your horizontal levels. That's numero uno. So let's go find some. All right. Trend lines are useful as a general gauge, but I use trend lines much more to help inform me of what horizontal I should be looking for, or confirmation that a horizontal is going to be was more likely to end up confirming a support or resistance, right? Okay, so here's my daily levels. I got to do them all up here on the chart for you. Obviously, you're in an uptrend locally here. You've got higher lows and higher highs. High, higher high. This is a little bit of a lower high, but all in all, it's in an uptrend. Uptrend. So that's good. Yeah, so in an uptrend, what you want to do is you want to buy support in an uptrend, right? So given these levels, you know, you got your 50-cent level here. Let's throw a trend line on this sucker. Does it extend all the way from here? Is there a good one that works? We're going to go ahead and use that trend line. I bet it's probably pretty close to this top one up here. It sure is pretty close. Not quite exact, but, you know, close enough. All right, close enough for government work. Let's see here. I'm just going to do something. If I line up, and I'm going to line up the dailies. You see how, like, I talked about that earlier, the wicks or noise, the daily levels. You're getting kind of an ascending triangle if you anchor this. You see that general price action is slowing down, obviously, with this huge launch that you had here. This next impulse was smaller than this impulse. And then these downsides are smaller than that. I don't know about smaller, but it's starting to compress a little bit in price, which is just fine. There's nothing, I mean, it's in an uptrend. I'm overlooking for stuff here, but probably if I drew a perfect line from here to here, I'm gonna bet, and sorry, this might laggy as I'll get out. I'll have to go pull a video card after this and see what's going on with it. All right. Yeah, no, that's not gonna help us at all. I'll just live with this. Uptrend. We like it. We like things in an uptrend. So yeah, buying and support in an uptrend, right? So your two ways to draw these trend lines is here and here. I like the longer one. I like taking off this base of this launch. You could even anchor it in the daily here. You can see how that's going to give you some more high fidelity. This is going to give you kind of like an early warning that you've got some issues. And then I bet if I anchor this again over here, no, it's not quite exact. But if I take this and clone it down to these lower wicks here, I'm playing around with stuff right now. I'm trying to see what I like, right? No, I don't like that. I'm just going to stick with this wick. Okay, so you know pretty fast where you're wrong, right? If you lose this is kind of a launch angle at this point. You know, you've had this low put in. Here's the other thing that I would do. I'm just looking at this. So you see your launch, your big launch that you had here, and then this is where you found support, which is over here. This is where obviously you found your support was these kind of this support that you confirmed over here as resistance. So when it first was launched on wherever the Huobi, big strong move, and then it got fell off here, and this wick low right here confirmed as resistance, and then this basic level is what confirmed as support over here. Okay, so you had this low put in, you had a bottoming pattern put in, you had this very strong launch here. This trend line right here, what this signifies to me is this is your launch angle, and you've taken off, but now it's starting to, it is starting to roll on its you know, kind of, you're getting this like kind of rolling, sloping. This is loss of momentum in general. It doesn't mean that the trade is done. It just means that you start to see these signs of it going into consolidation. And what you had here is you had a breakdown off of this launch angle right through here, and this touch on this bounce that you got kind of confirmed the launch angle for me. So what you see happen is price came into it and actually fell through. And then what it did is it came up here and touched this and confirmed that as resistance. So this trend line is now resistance for us. So something else that we can kind of do here. So you've lost that launch angle. It's not the end of the world. I'm going to get rid of that. Not the end of the world, but you're starting to consolidate here. So most likely you've got some time to work with consolidating. It needs to consolidate now at this point. We have this new launch angle, so we can see if we can't ride this trend line on up through here. Confirmation that it's going to resume would be to take out this level over here, in my opinion, this daily. Close it back above this, and you can look for a trade back above, you know, up over here and follow this other trend line. I would say the odds are, given that this is showing signs of rolling over, it hasn't fully confirmed yet on this time frame I'm looking at. What I would say would be complete confirmation is taking out this wick low right here. This wick right here, this is the bounce that you got. This is where we're anchoring it off of. If you take that wick out, you know you're wrong about 47. It's coming back down to at least 37 to consolidate, and if not lower, right? But so the risk reward would be possibly taking a stab at an entry right here, knowing that you're wrong right here. It's a nice tight stop loss. It means that you can get a decent position size without having to, you can get a decent position size without having to risk too much percentage of your capital, right? So these are the type of things I might layer in if you're really, really bullish on Epik here. But it really depends, obviously, on if the broader market is going to get resumption here soon. But the other thing to consider, yeah, I mean, we made this all-time high way back here in August, or this high on this chart. So it's not really an exhaustion because you simply just found resistance back over here again. So another way to look at this whole chart, and I'm just spitballing right now, just going, all right. Another way to think about this whole situation you've got going on here is you're really consolidating below this high. So you tried to come out, this is a double top rejection of that high. And at this point, because you've made a higher low here, all you've really done is you're consolidating under that key resistance right there. So I would look for more, most likely you're going to see some more sideways action in here before you make your resumption, your next attempt at taking that out. But all things to look for. This may not be the best trade in the world, but it is an idea. It's a trade idea that you can play with yourself. Not financial advice. I should probably do my usual. I don't think I did my usual at the open here. None of this, because I went. Make sure that this is not financial advice. This is just me giving you my opinion and what I see in the markets. And where's my long idea? I always can never find this long position, right? So there's your long idea. So your target, your short-term target would be just 61 right there. So let's see here. What does that give us? That's a 3-to-1 initial trade. All right. So that's a 3-to-1 trade right there. You were to take a position coming into that 51 support with a stop of just below that wick right there. It's roughly a 3-to-1 trade, just getting you back to this range, right? So you're playing this little bit of a range that you've kind of established here with these daily levels. A little 3-to-1 trade potential right there. I would say the odds, that's a 3-3-1, 3-3-2 trade. Decent. I would probably put, if this was something I was watching, I'd probably take it. Because I think the odds of this working out is about 40%. So if you win 40% of the time on a trade like this, and it's a 3.3 to 1 risk reward ratio, after making 10 of these trades, you're going to be making some nice money. The other thing that I would really, be looking at here, if you were to put that trade on, the way I think about this is if I get stopped out here, yeah, I took a stop, but I'm also going to have another really good opportunity here for another like trade. So I'm going to keep working that asset, right? And I just know the next trade might be the one that gets me some good profit. The other thing to consider is what are the odds that it's going to break out above your target, right? So In this case, you have a 331. So what I would do is assess what I think the odds are of breaking to the upside of this 615 level, and I would adjust my take profit and risk management according to the odds that I think we're going to break back to the upside of this. Now, I think given crypto where we're at and the crypto seasonality, and that an alt season could be coming here pretty soon, the odds of us breaking the upside of this based on this chart that I'm seeing, based on the fact that this is ultimately consolidating below this, is probably 20% or so, right? That you get a good continuation before you need to take profit or before you get a break-even stop loss. So for me, what I would do is as soon as you hit this, I would take my minimal profit, which is 10%. My initial 10 to 30% is typically what I take right off when I hit my initial target. So you can judge for yourself. I would take probably the minimum, and I would move the stop loss and a break even right away, and just live with a minimal trade, because what I'm doing is I'm trying to push the trade for a bigger win at this point. And if it starts to roll over, then I might go ahead and just exit manually before it comes back to the stop loss. If I see it consolidating here, and then I see a lower high, a lower low put in right there, coming off of this, then I might go ahead and just take my profit. What we're trying to do is we're trying to see if we can't get some consolidation under resistance and break through and then make it to this next level and really push that trade some more. So just all things to consider as you analyze your trade entry, your risk management, your take profit management. These are just probabilities, right? And there's no certainty. We don't know if this is going to go straight down to zero, it's going to go straight up to $10, or do the more probable something that looks like this, right? That's what we're hoping for. We're hoping to get in a trade here, and then ride that trade out over to here, take a little bit of profit, not get stopped out, and push that trade type of thing, right? So we don't know what's going to happen, but it's all probabilities. It's all what are my probabilities? How do I set the trade up to where if I take 10 of them in a row, and never worry about the next trade, right? Never, ever, ever worry about the next trade. If you get stopped out, you get stopped out. It's just the way it works, right? All you're doing is you're thinking about this. If I take 10 of these in a row, how is that going to work out for me? Not is this trade going to work out? Because you have no idea, and it doesn't matter. If you get worried about the next trade every time, if you take a trade and you get over consumed with that one trade, and you're obsessed with, is this trade going to win or lose? And when it loses, you're upset, and when it wins, you're euphoric. No. It's a series. If I do this 10 times in a row, am I going to be profitable? And looking at this chart, if you did this exact same thing 10 times in a row, you are going to be profitable. That's just the probabilities are that you're going to be nicely profitable if you do this. And then the other part of it is trade management. Once you're in a trade, especially once you're in profit, then when do you take profit? When do you push the trade? When do you move your stop loss to break even? When do you move your stop loss to profit? These are all probabilities, and you're constantly gauging every moment in time. You're gauging the probability of what's likely to come based on price action as it's unfolding, and then you continue to manage that from there. So long answer, but since everything else is selling off, I figured I'd talk a little bit of just like psychology here. And let's go to the comments now. Oh, thanks, Lemmy. Is Eagle finding support at 330? Let's look at it. Eagle 330. So this swing high over here is what I was looking at for support. You got daily. See, it wanted to come back down. It actually came down to this Heath level right here. So it's finding support at, so the Heath level is 325 roughly on this Binance chart I happen to have up here. It broke down though, so I had this descending wedge pattern. Let's go to a lower time frame, LTF on this one. Yeah, so my problem is currently we broke down of the flag that we're putting in here, the pennant. So these patterns can break either way. It did break to the downside. We're waiting for confirmation. This gave us a low time frame confirmation. Here's your low time frame confirmation, and you got some downside off of that. Now we're looking for a little bit higher time frame confirmation. Are we going to close a daily below it, and then are we going to get resumption? So it would be bad news bears for Elrond if here's how I would say this, right? So you've got this longer term trend line here. We had this pattern. So we're going to find support at this trend line. I've got 302, this swing high over here that you saw built as support over here. You don't want to lose those levels, but it would be bad news bears if we close daily out here got back up into here, and then lost this level, that would probably indicate some more downside. By the time you come into there, you're looking at this trend line. So you need to kind of hold this this general area right through here. A confirmation of losing 302 would put us below these trend lines and probably put us in at least a consolidation up over here. Now, I don't think Elrond in the broad market where we're at right now, I don't think Elrond has that much downside with this. I don't know if they're out of their maintenance yet on the Myra Dex, but it's not looking. It's just not a good look for them right now. But yeah, I would say, I mean, a low time frame, we got a breakdown of this little bit, but of a pattern here into the support here. So this is probably not valid anymore now that we've had the low time frame breakout. So what we'll do is, I mean, I guess I'll keep it on there because I do want to watch if we come back into it what happens. But it's not a super, like, this level is no longer a super valid level, but you see all this invalidation on this wick here, and we've already lost it, so it's really not that important to watch. What I'm much more interested in watching at this point is just this main trend line at this point, right? Do we find support here? And the answer to your question, it could be, right? It could be finding support at 325 Heath level right through here. You see there's a lot of buyers built up right here, right? That we confirmed this as support over the period of time. So you've got some supply here, right? Some willing buyers probably in that area where it sat for a while. Yeah, so most likely you're gonna eventually find support. You can see here this kind of general zone goes all the way back over here. These highs, how far back does this go? Hold on. Yeah. So there's your kind of range. There's your zone of support. You know, if you get to the top side of it and then we resume off of it, that's looking good. I wouldn't be too concerned if it consolidated here along this trend line for a little bit. Now, obviously, I've got some wick lows here. I'm just looking at this bottom trend line. So there's nothing that says it can't come back down here for a bit, right? But what we're looking for when we get down to this bottom range, this bottom trend line, what you're looking for is it to recover quickly. If it doesn't recover quickly, if you see it, you know, kind of hitting this and then rolling over, this upper one is the one we're going to want to watch more. We want any trips down here to be kind of short. But those are just random thoughts. Yeah, I mean, I don't know if it's finding support here. We've got a bounce here, right? But that finding support and getting a short-term time frame bounce are two different things, right? It's going to take some time. It's going to probably look like this when it's all said and done, you know, to really confirm that we've got some really good support in that range. And it could bounce back fast too, right? I don't know. It just depends on a lot of external factors, but so I'm talking and thinking at the same time. It's the top of that Heath level right there. So let's see how the bounce is, right? A good strong bounce, and you know that's going to change the tune for a lot of things. All right, let's look at Bitcoin. Bitcoin hit 51.8 weekly support level, and we're getting a little bit of a bounce off of that. The problem is just the invalidation of these wick lows over here. This lower low. Ultimately, still, you know, if you look at it so on a shorter time frame, it's looking a little bit like, I don't like the fact that this wick took out that wick, but on the longer time frame, ultimately, what I'm still seeing here is just this general pattern, right? We're not going to overreact to wicks, but you have this low over here, you have this high over here, you have this low over here, you have this high over here, and you have this low right here. Right? It's ultimately what we got going on, and we're in an uptrend. So until you get really strong indication that you're going to break down, then you know, I'm not going to be overly concerned. Same thing happened, if y'all recall, back over here. We had, on this sell-off here, we had some early warning signs all over the place. We were watching, a bunch of us were watching, like, you know, just this general trend line through here, I think. Right? This was nice, you know, 2 orderly touches here and a third one just coming just about back into that right there. And if I remember, I'm trying to remember all the trend lines we had. We were working this trend line right here. Yeah, this was the main one. I remember now. This was our best trend line at getting out. Same thing. There you go. So it was a pretty good, you know, bottom here, touch there, bounced there, and then it fell under. But that fell under really fast, and we came back. Do you see the point at which it fell under? Right there, that blue line's a weekly level too. You notice that while it didn't come back to the trend line, price made its way back to that horizontal level, which is, again, trend lines are less important than horizontal levels. But what's interesting is that the market lost this uptrend when it lost this trend line over here. But the market, and then the like pretty much the closest horizontal level to that, major horizontal level to that, is exactly what the market came back to test as resistance, and it rolled over. So just using that little bit of education over here, right? Most likely what's going to happen, if we do lose this bottom trend line over here, you'll have a situation where we come back down, and then we come back up right to that 51.8 level that we just talked about, most likely, and then we're going to get signs that we're curling over. So somewhere in here, when we confirm that the market is showing us that 51.8 is now resistance, will be probably your last chance to trim some spot before probably a prolonged accumulation. I would, again, imagine not nearly as nasty as this sell-off, but if this confirms as resistance, then you're going to be stuck in this range for a little while until you finally get back out of here, right? And so some people, who are, long-term, really long-term bulls of Bitcoin, may prefer not to even sell their Bitcoin in that type of environment, right? So there's going to be a lot of people that are just going to hold through this. And I totally get that. For me, again, I'm a trader, so my base accounts, if we were to get into this range over here, my base accounts will just be chilling in stable coins. I'll be collecting, on Gemini specifically, collecting some interest when I'm not using the coins for trades, but we'll take it from there. But so far, again, we got that bounce off of the 51.8 level. That's the level I was always watching. Pets, comments. Long answer. Long but very helpful. Is this the bottom for Bitcoin? If you want my guess is 51.8 is the local bottom. Yes, that's my guess. It's a guess, though. I don't know. Probably, I would say 70% chance that 51.8 or somewhere pretty close to there. I mean, we could obviously, this little bounce that we got here, we can obviously over the weekend, most likely over the weekend, what's going to happen. Let's just look at this on a really low time frame chart. I would almost guarantee you that over the weekend, you're going to get a Saturday pump, get everybody all excited, maybe up to this trend line, maybe high, I don't know, and then come right back down to it. Freak everybody the heck out and then bounce. And then Sunday night's what we're going to have to watch to see. If we get a good bounce, Sunday night, Monday morning, we get some resumption to the upside, trade on, risk on. If we get this, kind of back and forth over the weekend, and then Sunday night we lose this and get some volatility, and Monday we get some continuation down, that's going to tell us a lot. The coins on exchange this weekend. So the print that we get today after hours, once we get all the data aggregators have a chance to run their numbers for the past 24 hours, we'll look at it tonight. I'll probably put a tweet out. It's going to be super important over this entire weekend to watch that like a hawk. Coins coming onto exchange, volume profiles, leverage profiles. Are the shorts overextended? Is the futures overextended on the short side? So forth and so on. All that data is going to give us a huge heads up into Sunday night, and the Sunday night market open probably need to be live because that's going to be maybe the most important Sunday night of the entire market, of the entire bull run since we started trading this thing together. Summer of 2020. This Sunday is probably the most important single day. But what was I saying? I don't know. Is that I would put the odds at a local bottom of 51.8 pretty high, pretty high, or somewhere nearby, 51.5 even, whatever to the trend line. But somewhere right around here, this should be the local bottom that gives us a bounce back to 58 to 60K, would be my guess. And then that's going to give us a lot more indication as to what's going on. So we need to get a bounce here, clearly, and it needs to get back up here. If we roll over here, it's going to be ugly after that. What's your key level for ADA? I I need to wrap up here probably, guys. It looks like the market's just doing what we think it's going to do. I'm going to answer these last couple questions. CRO is launching. So CRO, you know, like remember Binance and went like parabolic along with the Coinbase IPO, you know, early this year, and then Binance Smart Chain went crazy, and I think they've been mostly sideways since then. This is a lot of hype around the naming of the Staples Center, Crypto.com. So, you know, this is a lot of retail buying. To me, it looks like it's breaking down here off of this parabolic top, and it's just going to consolidate now down here for a while. That's what I see. I immediately look at this. I'm like, okay, yeah. You got this uptrend launch angle, broke, confirmed to the downside. You've taken out this low right here, and you're just headed for probably down, and you're probably going to consolidate, you know, in the range that you built up as support over here before. Be my guess. This is where you're headed. Guess. Total guess. All right. ADA USD. Okay, here's my ADA chart. And sorry, my charts are really, really ugly because they're super functional and they're not meant to be pretty at all. I don't really care. So when you see blue horizontal lines, those are my weekly levels. So I've gone to the weekly and I've found all the weekly reversals and I've mapped those out as blue. And on this chart right now, it's really all I've got I'm working with because that's all the levels I really care about, these weekly levels. So those blue lines are the weekly levels. I've got this longer trend line looking for, you know, potential breakouts. The breakout would be confirmed outside of this for me. This is just an early, you know, I've heard other people call it double black diamond or whatever. This is just a short term, okay, yeah, we're starting to confirm. What I do is when we break the downtrend, I look for the most interesting horizontal levels, and that starts to tell me what I'm looking at. So you see here, when I look at this break of this sharp downtrend, I'm not looking at the break of the downtrend itself, and I'm not looking at taking entries on the break of that downtrend, the retest of that downtrend, the resumption of that downtrend. No, what I'm looking at is I'm saying, okay, the market bounced off of this horizontal level right here. And then after it broke out, the market found resistance at this horizontal level. So this is now my range, right? This is now my range that I'm interested in. So the next thing I'm going to do is probably look at, is it going to confirm support at 146? The market wants to confirm support at 146 here. At some point, probably buy a touch into 146 and put a stop loss right below that wick right there. One of those super tight, you know, this can even be a 0.1% or a 0.5% risk trade because it's such a tight stop loss that it's going to give you a decent position size with super small risk. So, you know, I might do a 0.1% or 0.5% risk somewhere in that range for this initial entry, hoping I get an immediate bounce and just kind of ride that out. And then what I'm looking for is for us to break this over here. And then the way that I do my trades is I would move, if this was my stop loss over here, right? Once we get up here, I take a little bit of profit, move stop to break even, and then I'm hoping it breaks through. If it breaks through, then I'm going to add back a more of a larger position size over here on this retest of this guy, and then move my stop loss up again. And then hopefully we get outside this, and then ultimately then I'd finally have a full size position. I'd be taking some small trades basically all the way through here. And then once we get out here, then I'd be a full size, you know, 1% risk, standard trade with the stop loss below whatever price action was coming into this. And then I'd be, you know, again, I'd be out my full 1% trade way out here. Hopefully having, you know, taken some profits on the way up and out through here. But as of right now, long story short, there's nothing for me to do on ADA. It's still in the process of telling, the market's still telling me what the levels are that I need to be watching. That's all it's doing right now for me. It's all I'm seeing. I'm just seeing, okay, the market is telling me these other blue lines I have on here are not as important. These two right here are the ones that matter. 167 and 146. And you can see here this daily level, it did put in a resistance here. There's a high probability that at some point in the future, remember that trade I talked about, you know, building up this trade all the way out here. At some point, you're probably going to see me taking my full 1% risk on a break of this right here. You know, this level is probably going to come in to be super important because it's the daily close above and the initial rejection off that weekly. That gives me another really key level to work with. Once we get outside this trend line way over here somewhere, if we come back in at test 172. That's that, or some of them. Obviously, we'll have a bunch of the levels to work with, but that very well might be one of the key levels that I'm watching for a buy, stop loss below that weekly, and I'm hoping for the bounce. That's my full 1%, right? Something like that. So, I do take, the breakout retest resumption. I will take those trades too. I've moved away from doing those as my primary trades. What I do now is I buy coming into support, because what I've learned is I was having to put on full 1% risk at every trade to get a reasonable size, because by the time the price has, broken out, come back into support, and then resumed off, the stop loss distance that you have to put under here, your position size is relatively small. So I'm having to do full 1% trades every time. What I've been doing more recently is buying into key support levels once the market's kind of bounced off it a few times with a super tight stop loss, a larger position than this or equal position than this, and a 1/10% risk. So I eat more stop losses. That's the other things. I do take more stop losses, but I might take 3 1/10% risk stop losses instead of 1%, right? And by the time it's all said and done, it's a net win. So that's also some slight modifications to my trading that I've been doing. I will take, if something moves very fast and it just breaks out and it's really trending, in a real trending market, I will take those breakout retest resumptions all day. I take the resumption because it hasn't given me the time to build that base and do that tight stop loss buy into support type trade, right? If it's really, really trending, let me just an example of a trending. Let me just go find DOT. I like to use this one because it was super trending for a while here. Okay. So this is where the breakout retest resumption really, really shines in my book, is these super trending markets. Like if I'm over here trading this thing, and it's just going up and up and up and up, breakout retest resumption, these entries are the only thing you're going to get in a super trending market. Breakout, retest, and somewhere in here you get a resumption, right? You get probably right here, you got a signal, stop loss there. So this is where that type of trading in this very trending market, but the market is only trending a small percentage of the time. And so the rest of the time, if you're going to be not getting just whipsawed around, eating a bunch of 1% stop losses, all through here, you're just eating a ton of stop losses, because it's really, really hard to do breakout retest resumption when the market's going sideways on you. This is also what I've learned the past year, is in these sideways markets, I've lost interest into just breakout retest resumption. I've taken on a much more Heath style of finding the support level, buying these as it comes into the support level, and playing the range, right? And then hoping to push it, but then I'm got profit on here. Like for example, I can play this range pretty well doing that, and it's a lot less risk, and it's a lot less. I can actually take some profit a little bit more reliably in these sideways markets. So a few modifications there, but to answer your question about ADA, it's just I'm just watching. It's working on trying to put in some support here. Do we get a bounce on Bitcoin? Okay, good. The daily close. Let's just highlight this here. The equities markets closed. The equities markets actually closed up, so we didn't have a sell-off coming into close like I thought. Interesting that we got a bounce into close. So is that the daily close here for equities? Was just right back here. Yeah, looks like the daily close happened. So you see again, Heath style. This is where the reversal happened, and we held that. So the wick got below it, yes, but we held this 45.10 level on the equities markets. Bitcoin is going to hold, if it closes above this support right here. So we got the wick down to 51.8 that I was looking for. And you see this daily level. If we close above that, that's very, very, very good. This is just a liquidity hunt. Capitulation move right here. It's probably really high volume. I'm going to check the volume here in a second. Sorry, I had these comments on the screen this whole time. I'm really sorry about that, guys. I'm not used to the comments. All right, a daily close back above 53,777 would be pretty strong. That would give us a nice new level of support to watch. But that would give me some confidence in trying to take a move to the outside of this downtrend as well if we got that close above that. That means we got the 120 touch. We got the weekly 51.80 touch. Let me go to my other chart here. So this bounce is welcome if it continues through the close. Now, as of right now, it's a dead cat bounce, right? Because we have taken out some important levels at this point. But if it closes a daily over here, then we can largely consider this a nice bounce and probably some noise. Odds are over the weekend we will revisit that, because that's just what the market likes to do over the weekends and low liquidity. Oh yeah, Mark. Yeah, so trending markets, trend lines, choppier markets, Heath style. There you go. Don't Google Which platforms do you use to trade with touch? So if I'm really actively trading something, I'm probably on KuCoin. Especially, so I put a very small amount of my Bitcoin on KuCoin, and I do leverage trades there because I don't want to expose too many funds to that exchange. That's why you guys hear me talking about leverage trades. It's much more because I don't want to put too many coins on a particular exchange that has leverage. That's why I do leverage trading. It's not so much to get a bigger position size or whatever else. It's to limit my exposure on that exchange. Really, is why I'm doing it. But it's Gemini primarily, right? If I'm just spot trading, it's on Gemini. The other problem I have with Gemini is that a lot of my assets that I really want to trade are not on Gemini. So Cardano and Elrond and everything, those are all, I have to trade those on KuCoin. But if I'm trading, if I'm spot trading Litecoin, Ethereum, Matic, Sandbox, all those names, that's all in Gemini. And Gemini is a great exchange if they can just get some of my dang coins that I want. Jay King says, thanks, Brandon. You're doing amazing work. Love your streams. So much info on the tech and trading. Thanks. I appreciate that, Jay King. Yeah, so try to weave in both here. I think that's, that's what I try to bring to the community, right? Is that combination of technology and trading. I'm not as good of a price action trader as Heath is. I'm trying to catch up to him, but I'm not as good as he is at price action trading. But I also do know technology, so I can kind of look at things and I can stay away from things that are kind of, maybe more questionable. If it's a pure trade, it's a pure trade. If you're just working price action, that's one thing. If you're going to hang on to something for a period of time, that's where I try to add some value. Yep. Do you gain yield on your bag? Okay, so let's see here. Then do you limit your gains because interest payments? Or do you gain yield on your bag? I don't know if this is what you're asking, but I am pretty quick to take profit on leverage trades because I don't want to be paying interest, right? Yeah, exactly. So if you're just like flat taking lightly leveraged positions on like Bitcoin and holding it in a sideways market for months, that is destroying your gains. You cannot do that. So if you're going to be doing leverage trading, you better have a really good system, really good risk management, and know that you need to get in and out quickly. You can't just buy and hold forever. It is going to just demolish your gains if you try to do that. So you'll see that I'm pretty fast. Like my leverage trades, I'm not in for very long, but my spot trades, I'm in for a long, long time. Right? Like my bigger spot trades were like Cardano or Ethereum or my base Bitcoin position or Elrond, which I've held for months now. Right? Those are spot positions. I'll hold on to those for months and months and months. That's fine. And yes. Anywhere I take advantage of yield as everywhere I can. So if there's an asset that's a stakeable asset, especially if I can hold it in a cold wallet and stake it with a stake pool, which is what I do with Cardano and Elrond and others. Yield farming, I participate in yield farming in little places. Alan talked about it on our last live stream. If you want to check it out, it was yesterday. He talked about he's much more in the Ethereum ecosystem than I am, so he uses a lot of the DEXs that are associated with the Ethereum ecosystem probably more than I do, especially the layer 2s day to day. But if you're trading coins and stuff, you can leave some. You can do some farming on some of those exchanges and any liquidity providers, or you can be a liquidity provider. That's great for getting yield and for getting airdrops. Just using platforms, you can get some airdrops. All those are really good ways to kind of supplement your gains in crypto. If you think about it, it's kind of like a secondary income, really. It's like building passive income almost. But the other way to think of it is there's only so much crypto pie, right? There's a big crypto pie with 2 or 3 tours of total. We're at 2.4. There's 2.4 trillion dollars worth of wealth tied up in crypto right now today. Every moment there are more tokens being issued. Like there's a lot more tokens being issued than there are burned. Right, by far most projects are inflationary. Right, and so if you're just flat holding a coin and not getting some sort of yield on it in some way, shape, or form, you're actually losing to inflation. Your piece of that pie. Right, there's only so much to go around. So the way I look at it is I do need to be involved in yield farming. And just so you know, you can provide some liquidity, like Sovereign if you have your Bitcoin in cold wallets, you can get some yield off these decentralized platforms as well. So to go check that out too. But I would take advantage of that. I mean, I do as much as I can, as much time as I have. Obviously, I've got my big project right now is yield farming on the Myar exchange on Elrond. But that's been kind of a disaster with them being down they're going to be down 24 hours now. But outside of that, those are all good things to take advantage of. I hope that answered your question, Quizzle. Have I said that right? I mean, you offset your leverage interest payments with yield on your coins. I better look. Yeah, largely I do. Like, I'm getting yield some places, and I'm paying interest other places for leverage trades. But I take into account I better be winning. My leverage trades better be getting me more back in winning those trades than I'm paying an interest by themselves, right? So I don't think about it in that way. I don't think, hey, well, at least if I'm paying interest over here, I'm getting yield over here. No. If I'm paying interest, I better be also appreciating. That asset better be making me money on asset appreciation, right? Being in a positive trade. If it's not, I'm cutting that trade, right? To me, there's no point. Like, I want to be earning yield to earn yield, and I want to be borrowing money to make trades to make more money, right? I'm not going to if trading isn't if the leverage trading isn't profitable, I'm not going to do it. I'm just going to cut those losses and stop. So that's just the way, or cut that. If I've got a winner and I can tell that, okay, this winner is now flatlining and it's going to be just going sideways here for a bit, guess what? I'm going to take profit and get out of that leverage trade and not be paying interest on that. So whatever, as soon as I detect that something is no longer going to be trending and it's now entering either consolidation or reversal, then guess what? I'm getting out of that leverage trade. Appreciate it, Zach. Appreciate the likes. What's your opinion? Benjamin Cohen says that in BTC's history, we never broke the last support level on the bull market support, which is now in the low 40s. That feels about right to me. I mean, honestly, I'm looking at these different Wyckoff potential patterns, right? These Wyckoff distribution patterns. And, I feel like right around over here, the low 40s would be the lowest possible spring level where it's like a fake out where we would probably be in this range. This general range I've got, kind of this broad range over here. I don't know if this is really accurate or not. I just kind of do this last minute here, obviously. But you get the idea, yeah. So I can definitely see us being in this, if we lose this trend line here, I can see us consolidating in this range below 51.8, which is kind of my key level that I'm watching right now for a horizontal level. That's my key horizontal level. I can see us kind of being range bound in that 41 to 58 level with, again, what happened over here was we closed a weekly and dailies below a key support level and then immediately bounced out of those. This was a perfect fake out spring. So exact same thing. If we were to be range bound over here, I could see us closing a daily like right below 40,000, 39,000, and even a weekly and freaking people out, and then to get a bounce right out of it. But yeah, Ben Cohen's 40. That's pretty much the exact level I'd be watching for the bottom of an accumulation phase. Thoughts on Solana? I don't like Solana. No, I don't think 85% drawdown is likely. Possible? Sure. Yeah, anything's possible. Likely? No. Not at this stage. I think, let me see here. Max pain for me, if it did get down below 39,000 for more than a day or two, max pain's 40% off from here. Yeah, 40% is where I would say max pain is. If we get below this, we've got, some serious problems. You've got some regulation or something's really, really bad's going on. And, then 20K or so is would be kind of the next floor I'd be watching, honestly. I mean, I guess there's a world where you could kind of just like triple bottom here on 29,000, but all this stuff is just, it's not really worth talking about because right here and now, we're in a strong uptrend. It actually looks really good. It doesn't look bad, right? It just feels bad because people have these expectations of these crazy numbers that people have been putting out all year that, by September, we're going to be 300,000. I was saying 288,000 by the end of September, right? That's what I was thinking, all the quote-unquote modeling I was doing. But, I've come around like, okay, that was silly of me to even be doing that. But there's people like, so then you have people that are predicting $300,000, $400,000, $500,000 this month. That's what's causing all this all this concern and confusion. But just like, if we take away those unrealistic expectations and just peel it back to here's what it's an exponentially growing technology asset, right? So think of it in that way. It's an exponentially growing new thing, exponential growth. It looks like an exponential growth asset, very volatile, a lot of big leg ups, a pretty violent downside, and then another leg up and consolidating right now, and it's in an uptrend. So there's not a lot of point in worrying about what's going to happen. Again, I think knowing where we're wrong right now, 51.8 is a line in the sand in my book. If you were to confirm that, now you have to confirm that as resistance. Like, even if we get a wick below it, right? If we keep closing dailies above it, I wouldn't be too terribly concerned. But confirming 51.8 as resistance, then we're looking at this range, and then we'll go from there. We'll watch and see what happens in this range. And then we'll map out the next set of criteria. But as of right now, what we're looking at is a break to the upside of this pattern. We're going to have some resistance through this area in here, right? So we're going to watch what happens. Do we roll over and then go ahead and lose this level? Or do we lose this level now? Those are the scenarios. Or do we take these levels and then make a nice strong next leg up to the 70s or something? Those are all the scenarios we'll be watching for from where we're at right now today. And I think that's better for us to focus on, knowing where we're at today, knowing the probabilities. The probabilities, I would say, are 70% we hold this level, or maybe I was 80%. 80% chance we hold, generally speaking, this level, and we get a move at least back up into here. That's probably the 80% probability. 20% that things are really broken in the market and we lose this level and we end up go ahead and consolidating down here for a bit. And then the next thing is when we get up here, we'll watch all kinds of data points to see what our probability is of downside versus upside. As of right now, it's a pure 50-50. We don't know. We don't know today what the data is going to look like tomorrow over here, right? But I would say an 80% chance we make this move back into this area. And then once we get in this area, then we'll have new data to work with to then start to assign probabilities other than 50-50 chance that we go either way, as to what, and then that's going to inform us as to how to manage, our positions from there. All right, brought up Ben's observation because it gives us more confirmation that we're going to either see sideways or up in the near future, worst case, back to a long consolidation in the 40s area. Yeah, I think, Ben's obviously proven, he proved me wrong about some things that I argued with him about. We had some back and forth. I was right early on, and then he was more right as time went on. So let's give the man credit where credit's due. He's a thought leader in the space, and we need to pay more attention. I need to pay more attention to his information and research, that's for sure. All right, guys, I'm going to wrap up here. Thank you, Crucial, for bringing up Ben's observation. I think that's a really good... he's probably got some good insights that support band is probably a really key area for us to watch if we break down where we're at right now. But as of right now, we haven't, and we're still in the uptrend that we've been watching. So let's just watch to see if this uptrend holds or not. That's the next thing to do, right? And then if it holds, we're gonna start to continue to observe from there. Who is Heath? Oh my goodness, you don't know who Heath is? Oh, we gotta fix this right now. All right, let me fix this for you. Heath is the best trader that works with us. So in our extended kind of community, Heath and I are on some couple of discords together. He's at Trade Talk on Twitter. I'm gonna pull up his Twitter right now. You need to follow Heath. He is a better trader than I am, so just be very clear about that. So now, I am 6 for 6 on him in Bitcoin directionality, by the way. When we have disagreed on the next probable move in Bitcoin at a more macro level, I think I'm 6 for 6 on him as to which way Bitcoin actually went. But that's because I'm very tuned into the crypto markets. He's all of the Forex and everything else, and he's also much shorter time frame. So don't mistake my little bit of bragging about myself there to be. Is this the real Trade Talk? I believe this is the real Trade Talk. Why does he have a thing in front of it? All right, so this is Trade Talk. Let me give you his chat. So there's his Twitter, and then let's go find his YouTube. Hold on, guys. I'll put his YouTube in the chat here as well for you, and then we're gonna wrap up on that. Follow Heath though. Learn. This is, you know, he's been super instrumental to me taking the next step in my trading. I've achieved a lot more clarity and a lot more. Is it Trade Talk 1 is his? Yeah. And a lot more accuracy with my trades. I've cut down on the size of my. I've increased the number of stop losses I hit, but I've drastically reduced the impact of those stop loss hits. If that makes sense, right? So I may hit 2 or 3 times as many stop losses now as I used to, but they're all much smaller than they used to be. So where I might have 3 really small stop losses and 1 big stop loss, before I used to have 2 or 3 big stop losses on the same kind of trade set. All right, so there's Trade Talk. Follow Heath on Twitter and on YouTube. And guys, I'm going to wrap up here. Thank you guys for your time. Take care, and let me throw on some Doge-wave here. I don't know what this is. Where's my Doge-wave? Do y'all want the 80s music or the chill outro music? Let's go with the 80s music. I feel like a little pick-me-up going into the weekend. All right, talk to y'all later.